I stopped to think about the ongoing debate. Should you buy or lease a car? It's surprisingly controversial. On one side, you have folks arguing that buying a car is the best option. You get full ownership, and in the long run, it can save you a significant amount of money. But on the other side, there are those who think leasing is the way to go. With leasing, you pay much less each month and get to drive a brand new car. After diving deep into the numbers and analyzing the various options, I was honestly surprised by what I found. The difference in savings between what car dealerships want to sell you and what's actually the cheapest option can be eye-opening. I'm breaking down 4 main ways to purchase a car, which ones are the most economical, and some psychological factors that often go unnoticed. What are the main options? Let's kick things off with the different ways to purchase a car. The first option is pretty straightforward. Buying a car outright. You pay the full price up front, and that's it. You own it from day one, and there are no payments or interest to worry about. Simple, right? Next, we have financing. It's similar to taking out a personal loan. You start with a deposit, borrow the rest at a fixed interest rate over, say, 3 years, and make monthly repayments. At the end of that period, the car is yours. It's a great option if you prefer spreading the cost over time without having to worry about the whole amount up front. Then there's leasing, which is kind of like renting a car. You pay monthly to use it, and at the end of your contract, you simply return it. The monthly payments here are calculated differently than in financing. You're essentially paying for the car's depreciation during your lease period, plus some additional fees. This is a great option if you like driving a new car every few years without the long-term commitment. Finally, we have PCP, Personal Contract Purchase. This option allows you to set a term, pay a deposit, and then agree on a final value for the car at the end of the term. At the end of the contract, you have a few choices. Keep the car by paying that final value, return it, or even use that final value to part exchange for another vehicle. It offers some flexibility, but it can be a bit tricky. Which is the cheapest? Now let's dive into the financial implications of each option. I ran an analysis using an average medium-sized family car, let's say a popular model like the Audi A3. For consistency, I'll use a 15% deposit, which is about $5,500, over a 3-year term. Starting with the higher purchase option, let's say I put down that $5,500 deposit, and the interest rate I found was just under 11%. This brings my monthly payments to around $1,000. So, over 3 years, I'll pay about $36,000 for the car. Now, if I were to sell it after 3 years, I could reasonably expect about $19,000 based on market comparables. But with second-hand car prices fluctuating, I think the market is going to change, so it's a bit risky. If I sold the car for that amount, it would effectively cost me around $17,000 to have it for 3 years. That's not bad, but let's keep going. Now, if I went for the lease option and put down that same deposit, my monthly payments would drop significantly to about $425. This is a game changer. Over 3 years, I'd end up spending around $20,000 for the car. However, remember that leasing often doesn't guarantee that you can buy the car at the end. You won't know the buyout price until the last few months of the lease. Next up is the PCP option, which is super popular and heavily promoted by dealerships. With the same deposit and a pre-agreed car value of $19,000 after 3 years, my monthly payments would be around $565. If I returned the car, that would cost me roughly $24,000. But if I decide to keep it and pay that $19,000 in the end, my total cost skyrockets to about $43,000. You can see here that if I returned the car at the end, leasing would have saved me about $4,000 compared to PCP. It's crucial to look beyond the glossy dealership offers and focus on the actual costs. Total cost of ownership. Before we wrap up the financial comparison, let's talk about the total cost of ownership, or TCO. This doesn't just include the purchase price. It covers ongoing costs like insurance, maintenance, fuel, and, importantly, depreciation. Leasing may seem cheaper at first, but higher insurance premiums and potential fees for excess mileage can quickly add up. Always factor in these ongoing costs to get a clearer picture of what you'll be spending in the long run. Depreciation factors. New cars can lose a significant percentage of their value the moment you drive them off the lot, sometimes up to 20%. If you're considering buying a new vehicle, keep in mind that this depreciation hits hardest in the first few years. Opting for a used car that's already gone through this initial drop can save you a significant amount upfront while still giving you a reliable vehicle. Interest rates and financing terms. Another critical aspect to consider when financing is interest rates. These rates can significantly impact your monthly payments. If you have a good credit score, you might secure a lower rate, saving you thousands over the life of the loan. Always shop around and compare different lenders to find the best deal that fits your financial situation. Psychological factors. If you're someone who likes to keep their cars for a long time, going down the higher purchase route can be quite beneficial. You pay it off, and then you're free from monthly payments. Plus, you have full ownership, meaning you can customize it however you want. But let's not ignore the downside. With ownership comes maintenance costs, and these can add up as the car ages. If you're not ready for that responsibility, a lease or PCP might be more appealing. They allow you to drive newer cars with lower monthly payments and take the stress of resale out of the equation. However, if you choose to lease, you need to be mindful of the condition of the car. If you don't keep it in tip-top shape, you might face hefty penalties. There are also mileage restrictions that could catch you off guard. If you go over your limit, prepare for extra fees. If you have the cash to buy a car outright, that can be a solid choice as it eliminates any monthly payment stress. But don't just dive into it. Consider buying a pre-owned car that's a few years old. It's already depreciated significantly, which means you're getting better value for your money. Now, if you don't have cash to buy that dream car outright, you might want to click on this next video. I give you 4 steps for financial freedom which can help you get there faster. I'll see you in the next video.